In today's world of market volatility and uncertainty, your retirement plans need to be front and center. With ever-changing tax laws, healthcare worries, and an unpredictable stock market, don't overlook the vulnerability in your retirement planning. Protecting your family and estate will be difficult with shifting policies in Washington. It's more important than ever to keep an eye on retirement.
Hi, and welcome into Eye on Retirement, the weekly show that keeps you in the know about all things retirement. If you're new to the show, welcome in. And if you're one of our many regular viewers, welcome back. I'm your host, Rick Everett, along with a full complement of panelists, including one of the founding partners of Market Advisory Group, Larry Kloefkorn. Joshua Cicora, our lead CPA with Market Tax Services. Trey Base, a Medicare advisor with Market Medicare Advisors, and Devin, Seward, one of the attorneys with Eidelman Law Firm. We've got a lot to cover, so we'll jump right in this edition. Larry, whenever you meet someone new in your office, you never know until you're into the conversations what issues will need to be addressed and which team members' expertise may need to be involved. Would that be an accurate assessment?
That is accurate. And for instance, recently there was a situation where a lady met with me for the very first time. She was in her early to mid 60s, and she was widowed as of about 18 months, and she has no children. So those particular components of the situation automatically made this was going to control the conversation. It needed to be tailor-made for her, and so obviously that's what we try to do. She was doing a remarkable job of protecting her money from market loss herself, and that was the key that she was thinking of. And then the other component to that was she was concerned about how her Social Security might be taxed. But one of the reasons that she was doing it yourself, sometimes we call that do-it-yourselfers, but the reason she was is because her husband and herself had had a bad experience with a financial advisor many years ago. In fact, it was like 25 years ago. And they had vowed that they would never use another financial advisor. The reason that she sought us out is because she heard one of our programs and that we are fiduciaries. So I might take a moment to kind of explain why that resonated with her. Mm-hmm. A fiduciary carries a special license, a Series 65, that says we must do what's in the client's best interest rather than our own. And she said that was what she was looking for. She wanted someone that she could trust. And so some of the issues then, as she began to show how, and she brought it all very well listed and organized. I could take one look at it and see very clearly what she was showing me. And essentially, she had almost all the money in savings accounts, money market, CDs, certificate of deposits, and these were all at the banks. And I think everyone's aware that the rates that banks are paying are not, very large, and that does frustrate people. There's a saying that kind of goes along with it that always gets a chuckle from me, if not on the outside, on the inside. But it's called going broke safely. And one of the things that means is it's not keeping up in inflation. Right now, we're in a raging inflation environment. But even if we weren't, just normal inflation, let's say 2 or 3%, she would have to get a very long CD to even keep up with that. So once she started to tell us that was creating her discomfort, she had her money that was made up, almost half of it was qualified money. Those are monies that are in retirement accounts, 401ks, IRAs, etc. And then about half of her money was in what's called non-qualified accounts, and that would be money that she already has paid taxes on. Those are very important distinctions, and that's why we have on our team CPAs that can really address specifically things like this. And so while she was concerned about the taxation of her Social Security, I knew that it would be worthwhile for her to have a conversation with our tax advisor and have the opportunity to hear if she was on the right track or if there was anything else to consider. And that's when I brought in Joshua to come in and have the tax advisor and the financial advisor sitting together.
Yeah, so this is when you bring me in a lot of times and we start to have conversations about how these different components work together, whether it's around Social Security and how that gets treated for tax purposes. You know, it's different than other sources of income in that the amount of your Social Security that gets included with your taxable income depends on how much other income you have. Now, right now, while she was in her 60s, she wasn't being forced to take money out of her retirement accounts, and it was going along pretty well for her. She could, you know, take a little money out of those savings accounts, out of those CDs as they came due. That supplemented her cash flow out of Social Security, and that she felt like she was controlling her taxation pretty well. But then we started to talk about how once she hits 72, she's going to be forced to start drawing money out of her retirement accounts, and that was going to potentially blow up her whole plan because now there was going to be a lot more money than she really needed flowing into her situation, which was then going to cause her Social Security to get taxed quite a bit. And you could almost like see the discomfort grow with her, right? So then we started talking about how tax planning plays an important key here because we can do things now that while maybe you're paying taxes now, in those future years, she'll have controlled her taxation much more effectively than what she was doing now.
So another aspect that as you address those issues, and she began feeling more comfortable. I think we could see that in her body language. And, you know, it's one thing to hear that we have a complete team, but it's another thing to see it in action and seeing us all in the same room and at the same table. She was approaching age 65, and but not there yet. And so I asked her about what is her current health insurance situation, and that was when I knew that at some point in this not too distant future, she was going to need to have a consultation with a Medicare advisor. So Trey would be the person that we would look to.
Trey Base, Market Medicare Advisors, welcome into the panel. When should someone start to be thinking about a consultation as it pertains to Medicare?
Larry nailed it on the head. As you're approaching 65, essentially the year before you turn 65, you want to really start thinking about where you are with your healthcare now, what you are currently getting, and what kind of coverage you might want in the future. So ideally, we like to sit down and talk to you about 3 months before your 65th birthday so we can really hammer out some of the details and go through the steps that we need to do together in order to get you set up for Medicare when you turn 65.
Now, a person wants to have that be just as smooth of a transition as possible from whatever employment insurance they might have into Medicare. You don't want to have both going on at the same time.
No, absolutely not. And that's pretty much double dipping. You're paying 2 premiums for 2 separate health insurances, but your employer would be primary and then Medicare would become secondary. It's a lot of coverage that is unnecessary.
Devin Seward, Eidelman Law Firm, welcome to the panel. Devin, explain some of the elements that people need to consider if somebody hasn't started with estate planning yet.
Right. Thanks, Rick. Yeah, if they haven't done anything up to date, first of all, this one's going to seem obvious. Meet with a qualified attorney. That means call us. You see the number on the screen. Give us a call, schedule an appointment, and you know, we can't help you until we meet with you and learn all the details and the odds and ends of your personal assets and your heirs. So in the first meeting and consultation, they're always free of charge. Secondly, you're going to want to have the right legal documents in place for yourself, for your particular matters. Every situation's different, so until we speak with you, we won't know exactly what you need, but we can do any legal document necessary. Those often involve trusts, wills, powers of attorney, and deeds that transfer your property. I'd like to spend a little bit of time today talking about what I believe is the most important legal document you can have for your estate. I call it the cornerstone of your estate planning, the last will and testament. Now, I know a lot of our savvy listeners and viewers out there are going to know, they've heard it before. A good estate planning lawyer is going to try to get you to pass your assets outside of the will, avoid probate, avoid the lengthy, costly process of court. And obviously, we have those same techniques and strategies, but I'm going to save some of that for the first consultation and meeting. So come in and see us, and we'll give you those. But the reason the will is such an important document, the main reason is because of the residuary clause. It's a funny sounding word. Let me read an example of this type of clause for you. I, Devin, give all the rest and residue of my property, wherever located and whenever acquired, and whether known to me or not, to my younger brother Ivan. So that's an example of the clause that is in every will. I mean, we have a variation of that in our wills. So why is that clause important? Well, if your assets aren't properly transferred, they're going to get left behind. And anything that anything that's left over, gets thrown into the residual estate, and that particular clause will pass it to your specific beneficiary. Think of this clause as a safety net. It's going to catch any of those falling assets that don't find the right home. And as lawyers, we always try to think of what's the worst case scenario for something. We try to plan for the worst and hope for the best. So we always think, what if? And what if, you had some property or farmland that you inherited 20, 30 years ago and you forget about it? Then that asset was not mentioned to your lawyer. It wasn't included in your estate plan, and it gets left out. And if you don't have that will in place and naming a specific beneficiary, then that asset is going to pass potentially to the state. I mean, it's going to pass with an intestate succession method, and you just don't know how that'll end up. Another what if is, what if you have a bank account and you're trying to file the paperwork to get that transferred to the right beneficiary? Well, maybe the worker bee forgets to file the paperwork, or they lose it, or something happens and it doesn't properly get filed. Well, that bank account would revert back to your estate, and you need that clause in the will to help transfer it the way you want it to be transferred. So that's why it's one of the key elements and fundamentals of an estate plan. So I think personally, every single person out there should have a will in place. All right.
At Market Advisory Group, we practice a holistic approach to retirement planning, whether it is the estate planning, Medicare advising, tax consulting and planning, as well as financial advice. And we do it all under one roof. Do you have a team working for you? Why would you pay for incomplete advice? Our operators are standing by right now to offer you a complimentary, no obligation consultation. Give us a call at 316-252-8707 or go to our website at ionretirement.com. There you can view past episodes or submit a question for a future show. We'll be back with more Ion Retirement right after this.
When people work with Market Advisor Group, they get a feel of sense of family. There's a lot of relationships that are made and going on in this conference room, and we really take a lot of pride in that and a lot of satisfaction in that.
Every client we work with, we make a custom-made plan to fit them and help reach their goals in life.
Another thing that makes us unique is we want to meet regularly with our clients and have reviews.
Market Advisory Group, we have a process, and the process we take people through is first to understand what they have, understand who they are, and then we put together an income plan for them and show them how they can look forward to retirement and not look, though retirement is going to be a stressful time. It needs to be a stress-free time.
A few unique features of working with Market Advisor Group is holistic in-house financial consultants. We've got an in-house CPA, Joshua, an in-house estate planning attorney, Gerald, an in-house Medicare advisor, Bill. We rely on all of those professionals for, again, additional service within our consultative process, making sure that we've got the advice and the expertise behind the recommendations that we make.
You know, as an advisor, I'm not there to sell them one way or the other. I'm there to educate them, to let them know what their choices are. Then I try to help them make the right choice where they can save money and feel confident in their decision.
Absolutely the best part of my job is getting a stack of paperwork from somebody and they don't know what to do, and then I can turn around and give them back a tax return, but also to be able to explain what they can do next year that will give them a better answer than what they had this year.
When we've got clients that are calling and they need to help out a child or need to help out a grandchild or need to help themselves out and they're in a situation they didn't expect to be in, I really relish the opportunity to help them through that, help them make the educated decisions in somewhat stressful situations, because a lot of folks don't have that type of counsel.
We meet with so many people one-on-one in this office that don't ever end up becoming a customer or doing business with us, and that's okay. But when they leave our office, we know that we've helped them either get some answers to some of the questions they had or get some clarity on maybe their own path.
But one of the things that we hear all the time is, I wish I would have met you guys 10 years ago, because how much further could I be down the road? Well, Johnny Appleseed said, you know, when's the best time to plant a tree? 10 years ago. When's the second best time? Today. And so if we can help people today going forward, that just brings an incredible amount of comfort and excitement for us to come to work every day.
Hi, and welcome back to Ion Retirement. Larry Kloefkorn, financial advisor and founding partner with Market Advisory Group. You encountered someone recently with an employer retirement account that was largely made up of one asset class. What saith you?
Yes. So in their case, he had put, while he worked for this company, all of his retirement monies into the company stock in which he worked for. And it turned out, in terms of its growth, to be a sage move. And so this thing had ballooned up, and it was a huge amount of money. And all he could think of as he came in to talk to me was, I know there's got to be a big problem that I'm facing right now with all of this being in company stock. And he said, I'm not scared to pay taxes. I just only want to pay my fair share. And well, that person to guide him, again, is going to be one of our CPAs. In this case, Joshua came in.
Yeah, so we started talking about the account he had and that it was all built around the company stock. And not only was it built around company stock, but that company stock had grown quite a bit. So that created a unique planning opportunity for him where we needed to explore not just what the value of the account was, but his investment in that account. And in certain circumstances, we can, instead of just rolling it over, we can engage in a more complex transaction where we can try to take advantage of some advantageous capital gains rates. In this particular situation, because this is all, like you like to talk about, custom-made plans, in his unique situation, that transaction, which might be advantageous for a lot of people we meet with, in his situation, it wasn't working in his favor because he was not only had this large retirement account, but was still earning a lot. So that meant whatever tax moves we might consider making at the current time were going to be very expensive. In fact, prohibitively expensive. It wasn't going to be worth it to pay a lot of tax now to eventually save those taxes in the future. It may not ever balance out.
Trey, that brings up an interesting point. When somebody is planning on working past 65, let's say they have a goal of working until age 70, do they still need to be doing things as they approach 65 as far as Medicare goes?
It depends whether or not they're actually still on their employer plan and if they plan to keep that. A lot of times we see clients coming into our office, turning 65, still working until that age of 70, and they just decide to switch to Medicare because, one, it's a little bit cheaper premium wise, and two, it offers a lot of coverage that you can't get from like a group health plan.
Larry, let's go back to the client you were talking about. Do you think it's advisable to have such a large percentage of a retirement account made up of stock of your company? I mean, that kind of goes back to the old adage of having all your eggs in one basket, doesn't it?
Yeah, in a sense, it creates one risk that is, we call it single stock risk. Now, there are other risks involved in this, of course, but that one is certainly one that would be obvious. And so would I advise someone to do that? It is a case-by-case basis. In some cases, that might be right for the thumbprint. For instance, maybe the plan doesn't offer any very good options to that, and that's the main thing. Or maybe the client is just convinced that this stock is going to continue to increase and do better. So it's a case-by-case situation. We could talk about some variations of this, but I think probably we want to save that for another show and talk about the different types of retirement accounts that hold stock in them.
At Market Advisory Group, we're here, and we're here for you, practicing a holistic approach to retirement, from the estate planning to financial planning, tax planning, and Medicare advising, and it's all done under one roof for your convenience. If you'd like to set up a complimentary, no-obligation consultation, we're ready to take your call right now at 316-252-8707, 316-252-8707. We'll be back with more Eye on Retirement right after this.
How confident are you in your current financial plan? Do you know with certainty how the recent market volatility will affect your future hopes and dreams? How much are you paying in taxes? And how much are you losing to unnecessary high fees? You didn't work to save this money so that you could spend your time worried in retirement. Now is the time to take charge of your finances so you can feel confident about your future. Call in during the next 30 minutes of today's show only to set up an absolutely complimentary, no obligation, full-blown financial review that will result in your own customized written plan. This is a $999 value that we're giving away complimentary to the first 10 people who respond. We'll start with a full-blown analysis of what you already have, by running a report to untangle how much you are currently paying in fees, how you're allocated for risk, and what it's costing to work with your current advisor. Next, we'll identify your goals. Where do you see yourself in the next 5 years? Where do you want to go, and who do you hope to go there with? Is your current financial plan set up to get you there without mishap? Let's design a roadmap to create a financial plan you can follow with confidence. Get the piece that so many people are missing from their retirement. Find out how having a written plan can make a difference to your retirement dreams. Call now to schedule your complimentary, no-obligation, full-blown financial review today.
Hi, and welcome back into Eye on Retirement. Wrapping up the show, Larry, you hear a lot of different ideas that people have as they're retiring, but there is kind of a common one, a more common theme, isn't there?
There is. It seems like almost everyone, if they still have a mortgage when they are crossing over the river into retirement, so to speak, they want to be rid of that mortgage. And so they think about taking a large distribution from their retirement savings to pay that off. And they feel that that's going to bring them peace. And that particular transaction, so to speak, needs to have some special guidance.
which is where our CPA Joshua Cicora with Market Tax Services would come in. When somebody approaches you and has that idea or that goal, perhaps, I've worked all my life, I want to pay off my house. How do you guide them as far as tax consequences could go?
Well, first of all, this starts with the idea that this is that custom-made plan, right? Everybody is going to be a little different. Part of it is a numbers look. What do the numbers tell us? But at the same time, there's an emotional security that goes with getting that mortgage paid off. And it depends on that person's own thoughts and beliefs to how that gets weighed out. But as the tax advisor, I come in, I speak to the numbers portion of it, and we talk about, what interest rate does that loan have? It's somewhere 3 to 5% a lot of times when we talk to people. And then we talk about what kind of taxes are going to be involved when they take these distributions to pay off the mortgage loan. And we'll start to talk about how, okay, if they need to pull out X number of thousands of dollars, it's going to put them into a 22, 24% tax bracket. Add in state taxes, we could be talking 30 to 35% taxes to pay off the mortgage, and then they're paying 3 to 5%. So then I'll start to talk about, okay, if you compare those numbers together, if you pay it all off now, that's equals 6, 7, 8 years worth of interest. Well, they only have 3 years left to go on the mortgage. It just doesn't make sense in a lot of situations to incur that high rate of taxes, lose the growth opportunity on the accounts, all to gain that emotional security of having the mortgage paid off. In a worst case scenario, they could take gradual distributions over time using the retirement account to make their monthly payment. This way their cash flow, it isn't necessarily impacted because they're taking little bits out of the retirement account to address those mortgage payments while not driving their taxes up into a place that's ridiculously expensive. And so then we'll sit down, I can give them those black and white numbers. The client or whoever we're talking to can weigh, okay, well, here's what the numbers say, here's how I feel about it, what decision do I want to make? But until I sit down and present that to them and let them walk all the way around that decision, they can't, make that fully informed decision.
Larry, I guess the key is what you always say, plan ahead.
That's right. It's important to plan ahead, get started, before you actually file your paperwork for retirement. Get this information from the complete team. It's one of the ways that we try to offer retirement assurance. A lot of times people think about insurance. Well, this is retirement assurance. And another thing that comes into this, as you mentioned earlier, why would you pay for incomplete advice? Well, when you're making a retirement plan that's going to last you through the rest of your retirement, do you want low risk, low volatility, and high probability of success, or stay with high risk, high volatility, and low probability of success?
That's all the time we've got for this week's show. I'm Rick Everett, reminding you that we're here to keep an eye on retirement.
This broadcast is intended for informational and educational purposes only. The views, statements, and opinions expressed herein are those of the individual speakers and not necessarily those of foundations and its affiliates. The information contained herein does not constitute an offer to sell any securities or represent an express or implied opinion or endorsement of any specific investment opportunity, offering, or issuer. Any discussion of performance or returns is not indicative of future results. Each individual investor situation is different, and any ideas provided may not be appropriate for your particular circumstances. Foundations only transacts business in the states where it is registered or is excluded or exempt from registration requirements. Registration as an investment advisor is not an endorsement of the firm by security regulators and does not mean the advisor has achieved a specific level of skill or ability. Legal services are offered by Edelman Law Firm. Tax services offered by Market Tax Services. Market Advisory Group does not provide legal or tax advice. Investment advisory services are offered through Financial Advisor Larry Kloefkorn, an SEC registered investment advisor.